All right. Hello, everybody. This is Mike Rixey. I am the lead options instructor for Netpicks, and this is our options trade of the week. Before we get into our new trade for this week, we're going to take a look back at some of our open positions. We did it last week, and we had a couple of open positions coming into this week, so we want to check in on those to let you guys know what we have done on our side. So let's start out with MU. This is Micron Technology. We put this trade on back in late July, back on July 22. What we did is we came in and we put on a neutral to bearish position, and we did that by selling a call spread. We came into the August 16 monthly options, and we sold the 48.50 call spread. So let me go ahead and load up those strikes here a second, and we'll just load up the entire trade so we can take a closer peek at it. We ended up closing this thing out for a profit. The market has finally started to sell off for us just over the past few days. Now, we could argue why it sold off. It doesn't matter. You know, was it a Trump tweet? Was it a headline out of the China-U.S. trade negotiations? Was it earnings related? Bottom line, it doesn't matter. Price action's king. We are very overbought coming into this week, and we are finally starting to see a pullback, a well-deserved pullback. Well, we were already positioning ourselves over the past few weeks for this move, and now that we're getting it, we're able to take some action and book some profit. By putting on the 48.50 call spread, we were putting on a neutral to bearish position. We were selling the 48 call and buying the 50 call at the same time. We put this trade on, and we collected 66 cents or $66 per spread to put that trade on. We actually closed it out here today for 18 cents. It gave us a $48 profit per spread. Now you're looking at that saying, why is that even an impressive return? Why do we even feel the need to talk about it? Well, here's why it was such an impressive return. Number one, it only tied up $130, just over $130 of capital per spread to put the trade on. It's a very low cost trade, great for somebody with a small account size. It can be done with a larger account size because all you have to do is put it on multiple times. You can put it on with 10, 20, 30 spreads and still have a reasonable amount of risk. So when I say $48 of profit, that's $48 of profit based off of using $130 of capital per spread. Really nice return. And then also on top of that, it gave us 5 ways of making money on the trade. We did make money as time passed. We made money from that time decay helping us. We made money from volatility decreasing. We made money if the stock moved up, down, or sideways as long as it stayed below 48 bucks. That's exactly what's happened here. You can see it now it's trading for 43.5. So we booked the profit. Why didn't I hold on to it to expiration? For me, in this market that's just so active on every headline and every tweet that is released, I want to book the profit while I can. The closer we get to expiration, the faster those options are to react to changes in stock price. So I don't want to let this thing go from a 75% max profit to a loss, and that's what can potentially happen if we hold. I would rather book the profit, free up the capital for our next trade. All right, so we close out of MU with a really nice profit. VXX was another one that we put on previously. And let me go ahead and show you our position here. We came in and we sold the 22.20 put spread in the August monthly options, the ones with 14 days left. So we sold the 22 put and we bought the 20 put at the same time. In doing so, this was a bullish play on volatility. We were looking for volatility to expand. Now, we talked in previous videos why we were expecting volatility to expand. So if you've not had a chance to watch those, highly recommend that you go back and look at it. We talked about how when the VIX gets this low, when it starts to get into that 11 to 13 range, that's typically the lower end of the boundary. You don't typically see the VIX move much lower than that. Doesn't mean the VIX has to expand and explode immediately. We could very well chop sideways. We could kind of drift our way to the upside. Bottom line is the odds favored volatility starting to stabilize or even move higher. And that's exactly what's happened this week. In fact, it has exploded this week. The VIX has now gotten up above 20 today. Very nice move for us. So when we sold this spread initially, we did so back on July 12th. We collected 79 cents or $79 per spread. We closed this trade out today for right around 21 cents. It gave us a $58 profit per spread. This is another trade, very low cost trade. We're tying up around $120 of capital per spread. We made $58 off of a $120 investment. Really nice return, especially given that we had 5 ways of making money on the trade. I made money as time passed. I made money from volatility decreasing, which it didn't. Volatility actually expanded, but we did have the potential to make money if volatility decreased. But we also made money if the VIX stayed above 22. And when I say the VIX, I'm talking VXX. That is the volatility ETF that we were using for this trade. You can see VXX has now gotten above 26 today. So we were able to book the really nice profit. Could we have held to expiration to try to keep the last 20 cents of profit? We could have. Again, it was just too risky. We know that when volatility starts to elevate and get to an extreme on the upside, it doesn't tend to last long. We tend to see volatility spike for a couple days at a time. I would rather book the profit here, just like MU, book the profit while we have it and free up the capital, move on to the next trade. It's going to be in our best interest to do that. So it was a second winner that we booked here today. GLD is one of the last trades that we still have on for our trades of the week. This one was actually from a trade back in late June. We came in and we sold the 137, 138 call spread in the August monthly option. This was a bearish play on gold. So let me go ahead and load up those strikes here. We sold the spread for 48 cents. Or $48 per spread. It's now trading for 33 cents. We've got a small profit on this trade. It's about a $15 profit per spread. We have not hit our target goal yet. My target range is anywhere from 12 to 24 cents. That would give me 50 to 75% of my max profit. So there's nothing I need to do here yet. We're in a small profit. I'm going to continue to hold the position. We still have 16 days left. We have 14 days left on this trade. So I do still like the position. We'll see what happens here going into next week. I'll circle back next week and talk to you guys about how we're going to manage it at that point. We could potentially take it off between now and then and book the profit. So we'll circle back and see if we can keep the nice streak going with GLD. So now let's talk about our brand new trade this week. We've closed out of a couple of winners here. We've got some capital to work with. Let's go ahead and take a look at adding in another new position. What I'm looking at here, even though the market has gotten beat up the last few days, we have seen a couple of stocks that have actually hung in there. Pinterest is one of those, symbol PINS. It had earnings out after the close yesterday. Earnings were pretty impressive, and Pinterest, one of the few products that's actually pretty strong today. The market's getting beat up, but Pinterest has actually hung in there. It's actually up 23% here today alone. That is a huge move for a stock like Pinterest. If you take a look at our histogram, our red, yellow, and now blue histogram, that is what we call our pulse indicator. And it starts to identify overbought and oversold extremes for us. When I see this blue bar, like you're seeing on the far right edge of the chart there, that blue bar is going to pop up when we start to get over a 4 standard deviation channel move to the upside. For those of you that are not familiar with standard deviation, it's just taking a look at the probabilities and what is the likelihood of this stock continuing to move to the upside here. When you start to hit a 2, a 3, a 4 standard deviation channel move, that's an extreme. It doesn't mean the stock can't move higher. It just means, statistically speaking, it's not probable. Odds favor either a period of consolidation or a reversal here. The odds of this thing moving to the upside and continuing at this pace, less than 1%. So if you're a trend follower saying, hey, the trend is our friend, why not continue to play this thing to the upside? The problem is the numbers just don't back it up. The numbers actually favor the stock starting to consolidate, starting to move sideways, maybe even reversing to the downside. Now, if I'm taking that approach, why not just come in and buy a long put or buy a put spread? It would give us a far larger profit potential. The reason why I do not like that approach is if you buy a long put here, the only way you make money is if Pinterest makes a move to the downside. It's got to be a pretty decent sized move, and it's got to happen relatively quickly. Otherwise, the time decay is going to hurt you. Not a high probability trade at this point because price action has shown no signs of reversing yet. Are we seeing some signs of some exhaustion here? Potentially. Okay, we know that a 21, 22, 23% move in one session is not sustainable. A lot of times that'll be the blow-off move that you're waiting for at the end of a trend. So let's go ahead and take this outlook. We're very overbought. I'm looking to be neutral to bearish here, anticipating the stock either consolidating, moving sideways, or reversing to the downside. So let's jump over to the trade page. Now, for this trade, I'm going to go out to the September monthly options, the ones with 49 days left. Could we use some of the weeklies here? You could. I'm going out a little bit further in time because I am not convinced on the timing of this trade. I have a very strong opinion on what I feel the stock is going to do directionally. I do expect it to move sideways or lower going forward. I'm just not willing to go out to the weeklies a couple weeks out because that might not give us enough time for that outlook to play out in our favor. I would rather go out to September, go out 49 days, give us a little bit more time to be right. Remember, I can go farther out in time and know that time decay is going to increase every day. The time decay is going to help me make money faster on this position. So let's go ahead and open up those September options. And we want to go ahead and sell a call spread. So I'm going to go to the out of the money call options. I'm going to go to the 37 call. I'm going to right click on the 37 call, going to go to sell, and I'm going to select vertical. By default, it loads up an order down at the bottom where I am selling the 37 call and buying the 38 call at the same time. That's a dollar wide credit spread. There's a dollar wide difference between those strike prices. I'm going to go ahead and widen those strikes out. I'm going to try to get a bigger profit potential here. If I just use this dollar wide spread, I'd only collect 30 cents. That would only give me $30 of profit potential over the next 49 days. I want to bump that number up a little bit. So instead of buying the 38 call, I'm going to go ahead and take a look at buying the 40 call. Now I'm going to turn it into a $3 wide spread. There's a $3 difference between the 37 call that I'm selling and the 40 call that I'm buying. There's two different options as part of this trade, but it's placed as one trade. This is placed as a vertical spread. And it's kind of bouncing back and forth in here. I'm going to shoot for 80 cents to try to get filled at 80 cents. And let me go ahead and change that number, and then we'll bring up the order confirmation box to break it down in more detail. If I can get filled at 80 cents, it would give me $80 of profit potential. My risk would be 220. It's a little bit larger risk than what we've talked about over the last few weeks because I'm stretching those strikes out to $3 wide. I'm able to collect more premium. I'm giving myself a bigger profit potential, but I'm also taking on larger risk. My risk reward, I'm still in a desirable range. On a credit spread, we're typically in that risk 2 or risk 3 to make 1 scenario, which I know for a lot of you doesn't make a lot of sense because it goes against what everybody teaches. With a credit spread, we're always going to be in a scenario where I'm risking more to make less. And the reason why I'm okay with that is because I do have multiple ways of making money on the trade. Look at my break-even point in the confirmation box. It's at 37.80. I need price action to stay below 37.80 over the next 49 days. The current price of the stock's at 34. I can be dead wrong by almost $4, $3.80 to be exact. I can be dead wrong and still make money. I make money if the stock moves up, down, or sideways as long as it stays below 37.80. I make money from time decay adding up. So every day that passes, that helps me. And I make money if volatility decreases. I give myself 4 different routes to go in order to make money on this position. That's going to leave me with a higher probability of success. You're going to see a higher winning percentage with this style of trade. In fact, with our Options Express service, which is a service that focuses exclusively on credit spreads, we've had 10 winners in a row. Now, are we always going to see stretches like that? No, but long term, the odds are certainly stacked in your favor. That's the type of trading that I like to take part in. Does that mean I don't ever buy calls and puts? No, I certainly will buy calls and puts. I certainly will use some debit spreads over time. It just depends on market conditions. We're in a very uncertain market. We've seen a lot of back and forth here just the last few days because this market's reacting to every little headline that hits. Instead of trying to pick whether this market's going to make a big move higher or lower, I would rather use a credit spread here, give myself a really high probability of success, give myself 5 ways of making money on the trade, and it takes the pressure off needing a big directional move. Do I have a home run profit potential on this trade? No. The most I can make is $80. In fact, my closing order is going to be placed for between 20 and 40 cents. That would allow me to close the trade out and keep between 50 and 75% of my maximum profit potential. All right, so we're tying up just over a couple $100 of capital. Still a very reasonable trade regardless of account size. Really like the positioning of this trade. The ideal scenario for us is to get filled here and then have Pinterest either just sit here and move sideways or make a move to the downside. Any type of a move to the downside would allow us to make money faster. All right. So that's our trade of the week here on Pinterest. It is a neutral to bearish position on Pinterest, utilizing a short call spread. We'll continue to track this one here over the next few weeks. If you have any questions on this setup at all, feel free to post a comment here in the blog. You can post a comment on the YouTube video or send me an email directly. My direct email is mike@netpicks.com. All right, so I'm going to wrap this video up here. Enjoy the rest of your week, everybody, and I'll be back with you next week as we take a look at our gold position and our brand new Pinterest trade. We'll talk to you then.